One of the main reasons for National Grid soaring profits in the last financial year was the acquisition of Western Power Distribution, WPD, the largest electricity distribution network operator in the UK. WPD was bought from PPL Corporation for £7.8 billion in March 2021, and contributed £1.7 billion to National Grid's statutory operating profit of £4.4 billion. This was an increase of 82% from the previous year's operating profit of £2.4 billion. Statutory operating profit is the profit before interest and tax, and includes exceptional items such as gains or losses from asset sales or impairments. The acquisition of WPD was part of National Grid's strategy to increase its exposure to electricity, which is expected to grow faster than gas as the UK transitions to a low-carbon economy. WPD serves over 7.9 million customers across the Midlands, South West England and South Wales, and has a regulated asset value of £8.5 billion. National Grid said that WPD had delivered a strong performance since joining the group, with high levels of customer satisfaction and reliability. One of the key highlights of National Grid's financial performance in the year ended March 31, 2023 was the growth in its underlying earnings per share. This is a measure of the company's profitability that excludes one-off items and other adjustments. According to the company's earnings report, National Grid's underlying earnings per share grew by 5.4% to 65.3 pence, despite the challenges of COVID-19 and regulatory uncertainty. How did National Grid achieve this impressive result? There are several factors that contributed to this outcome. First, the company benefited from higher revenues from its U.S. regulated businesses, which increased by 7.6% in constant currency terms. This was driven by higher allowed returns, new rate plans, and favorable weather conditions. Second, the company saw lower net finance costs, which decreased by 8.9% to £1.1 billion. This was mainly due to lower interest rates and lower inflation on index-linked debt. Third, the company recorded lower tax expenses, which fell by 11.4% to £0.6 billion. This was largely due to deferred tax movements and lower U.S. tax rates. However, these positive factors were partially offset by some headwinds that affected National Grid's earnings per share. For instance, the company faced lower revenues from its U.K. electricity transmission business, which declined by 2.9% in constant currency terms. This was due to lower allowed returns and lower incentive income. Moreover, the company experienced higher operating costs, which increased by 3.7% to £4.8 billion. This was mainly due to higher COVID-19 related costs, higher pension costs, and higher depreciation and amortization. Overall, National Grid demonstrated its resilience and adaptability in a challenging year by delivering a solid growth in its underlying earnings per share. This reflects the company's strong operational performance, disciplined capital allocation, and efficient cost management. The company also rewarded its shareholders by increasing its dividend by 1.2% to 49.16 pence per share, reflecting its confidence in its future prospects. National Grid is one of the largest energy companies in the UK and the US, operating electricity and gas networks that deliver power to millions of homes and businesses. But how does National Grid plan to invest its profits to support the transition to a low-carbon economy? According to its latest financial report, National Grid plans to invest £30 billion to £35 billion across its energy networks and adjacent businesses, in the UK and US, over the 5-year period. This is an increase from its previous target of £25 billion to £30 billion, reflecting its ambition to accelerate the decarbonisation of the energy system. Of this amount, about £10 billion will be invested in the UK power transmission network that it operates, which includes upgrading and expanding the high-voltage lines and substations that connect power plants and renewable energy sources to the grid. This investment will help improve the reliability and efficiency of the network, as well as enable more clean energy to reach consumers. Another £21 billion will be deployed into the US gas and electric networks that National Grid owns and operates, which serve more than 20 million customers in New York, Massachusetts, and Rhode Island. This investment will focus on modernizing and strengthening the infrastructure, enhancing safety and resilience, and supporting the integration of more renewable energy and electric vehicles. The remaining £4 billion will be allocated to adjacent businesses that complement National Grid's core activities, such as interconnectors, renewable generation, energy storage, and metering. These businesses will help diversify National Grid's sources of income and provide additional services to customers and markets. By investing in its energy networks and adjacent businesses, National Grid aims to deliver long-term value for its shareholders, customers, and society, while supporting the UK's target of net zero emissions by 2050 and the US's goal of a carbon-free power sector by 2035.